Hi, my name is Christoph from CBR Technology in California. We are a Microsoft Dynamics 365 centric practice specializing in the deployment of Business Central and other related technologies such as Dynamics 365 customer engagement, or some folks refer to as CRM. And then, of course, the underlying and supporting technologies from Microsoft, including Power BI, Power Apps, and Power Automate as well. If your current Microsoft partner is a Microsoft billing machine and does not really support your Business Central environment or your customer engagement product, please consider reaching out to CBR Technology as your partner so that we may deploy the solution successfully and properly as it's meant to be done by Microsoft. Today, I would like to discuss year-end closing with regards to the procedures and functions you should be executing to conduct the year-end closing procedure in general. In preparation for year-end closing, you should make sure that you have posted all pending transactions. This would be specifically sales orders that have not been posted yet, cash receipts that are sitting in batches, any GL batches and or AP transactions that haven't been posted, and as well as, of course, purchase order receivers and invoice matching that you may not have completed as part of the three-way matching process in the PL module. So the preparation of year-end closing is quite critical because timing can cause significant discrepancies, and timing is very critical in completing year-end closings correctly. Finally, in the general ledger setup, by the way, you also have the ability to close the year. So in this particular part of Business Central, you have the ability to close out the year from a posting perspective. So this has nothing to do with the actual closing of the year. This has to do with preventing users from posting into incorrect periods. What we typically recommend is that you only have about a month or two of open transactional activity that you can post to. So with this simple setting that you see here, I have restricted all my users to post only into January or February of 25. So this would prevent any accidental posting back into 24 after your accounting department has determined that 24 has come to an end and that no further transactions should be posted into this period. So we'll call this typically some sort of a soft close, essentially. Again, this is only referring to posting new activity and altering any activity outside of this window. It is quite critical that we also close future periods. A common mistake made by data entry individuals in Business Central is to use December 25 in this case, in the future year, rather than using December of the current year that they think they are posting into. Again, this also can be done on a user level rather than on a system-wide level. So this is a system-wide level, and we highly recommend that you get into the practice of using this on a regular basis as you conduct your month-end closing procedures as well. After the general ledger setup, a soft close has been configured correctly, we typically recommend that you also check the general ledger, chart of accounts, and control accounts in the setup as well. Control accounts are all those accounts that tie to a subledger. So the subledger accounts typically include bank accounts, credit cards, lines of credits that you might keep as bank accounts in the cash management module of Business Central. But most typically, of course, accounts receivable, accounts payable, and inventory control or inventory management if your company has inventory management activated in Business Central. What's quite critical on these reconciliations is that they are done as part of your year-end closing. We recommend that you do these reconciliations monthly. However, they must be executed at least once a year. In our case, I'm looking at a sample company with an AR account. Another critical setting that you want to make sure is done correctly in your chart of accounts is that the AR control account does not allow direct posting into this account. So direct posting is a feature in Microsoft Business Central that prevents you from accidentally posting to this account directly without affecting the subledger. This would be done through a regular journal entry that could be provided by a CPA or an accountant, and they might ask you to adjust AR and just give you an entry and say, hey, go do a debit or credit to AR. And that is a very bad mistake if you want to make sure your subledger and control accounts are not out of sync with each other. If you do make a direct posting entry into that AR account, this transaction will create a permanent discrepancy between your subledger and your AR account. So unless you are bringing your system online and you are syncing AR control account to your aged accounts receivable account for the first time, you should not be posting on an ongoing basis as a direct account posting into these control accounts. To run AR aging report, you want to use a report called Aged Accounts Receivable. It's an account report that gives you the ability to specify a specific date as of which you would like to see your AR balance from the subledger. That balance should match the balance from your balance sheet. So when you print your balance sheet in Business Central, that number should match at that point. Be careful not to refer to this balance here, which is your balance that's showing on the chart of accounts listing page. And the reason why is because this balance gets updated every time you post a transaction in Business Central, and it's basically an ad hoc current look at this account balance without any sort of date cutoff. So please do not use this date as a point of reference, as that will not be accurate. We will repeat this process with the other control accounts. Specifically, aged accounts payable report will provide you with a as of date balance option for accounts payable, which is of course in your liability section of your chart of accounts, in this case down here. And then of course inventory as well. There's an inventory valuation report that allows you to run a report as of a specific date for inventory subledger purposes. The inventory valuation report has a number of functions and features, but for the purpose of the year-end closing, you would not use any actual filters on it. You would run it for all items and all categories, and the only differentiating factor would be the cutoff date that you're going to use for the purpose of that report. That report should match the balance that you see in your inventory account. If your system is configured to have multiple inventory asset accounts by location typically, you would of course add the sum of all GL inventory balances to match the inventory valuation report that Business Central generates for the purpose of reconciliation of the inventory account. An important issue to consider with inventory is the configuration you have within Business Central to handle receipt not invoiced configurations. In the inventory setup system of Business Central, there's a few options that are critical in this area. Be careful that you do not change those settings on the fly, but discuss them with your partner, as they can have permanent and significant impact on the reporting of the inventory valuation itself. Also, you might need to have a conversation with your accounting team about landed cost and how you're handling landed cost and what cutoff periods you might use for landed cost in future periods. Coming back to our conversation about chart of accounts is also the ability to make sure that your reporting in Business Central is accurate. Unlike other systems where if you add an account to the system with the new function here, Business Central will not automatically update all related financial reports. So this is quite critical, meaning that if I were to add another inventory asset account in here, let's say 100720, and that would be inventory for my New York office or Florida office or Texas location, you need to make sure that these changes are also updated in the row definitions that relate to the balance sheet and income statements, depending on what set of financial statements you generate out of Business Central. So adding new accounts is not as simple as simply hitting new in the system here and posting to it, but you also need to make sure that the financial reporting side of that modification has been adjusted to account for those new accounts. Depending on how the financial reports and the row definitions have been configured, some of them may appear automatically if you organized your financial statement by account categories. But many folks don't do that, so that's why I mentioned this as a point of warning that if you had any changes to your chart of accounts in the current year, you want to make sure you've checked your financial statements, that they are in balance and that they are reporting correctly. To conclude the conversation about subledgers, bank, AR, and accounts payable, which are your core accounting subledgers, make sure that you do conduct the reconciliation the way we discussed it and make reconciliation adjustments in the subledger as necessary. Meaning that if you want to recognize bad debt in AR, for example, or record additional transaction and credit memos in AP, make sure you go ahead and do that in the subledger. Do not make journal entries into the general ledger. Again, we will only affect the general ledger with an entry if there's a permanent discrepancy between AR subledger to the AR GL account, and the same holds true for bank accounts as well as accounts payable liabilities as well. However, the inventory conversation is a bit more extended, and I like to bring one issue to your attention specifically, and that is a report that the system generates called an inventory to GL reconciliation report. And it is a report in the software that you can run, and it does have an as of date. And if I run this as of the end of the year, so in our case here, the end of 24, again, you would typically do it without any sort of filters for the purposes of year-end closing. You would run this report, and the report that you would see is rather extensive. However, I like to point your attention to this column right here. Column number 2 is received, not invoiced. So again, this is referring to those companies that use the purchase order module, and they use the three-way matching process, which is of course why one of the reasons you use purchase orders. And these are transactions where you've issued the PO, you received the inventory, but you have not yet received the accounts payable bill. So the biggest single error that we find that companies make with inventory subledger modules or inventory management systems in general is that they make this mistake. They issue a PO, they receive the PO in the inventory management module and purchasing section, but they fail to match the invoice to the PO. Instead, what they do is they treat the invoice from the vendor as if it was a regular accounts payable invoice. And so what they do is they just go into purchase invoice, create a transaction, and post it in the system, and they think they're done. This is rather difficult to catch because from an accounts payable perspective, everything is fine, right? The invoice is recorded, subsequent payments and credit memos are applied properly, and your AP appears to be just fine. However, the purchase order module and the inventory module are not in sync with each other. So this is one of the only reports in Business Central that will identify these sort of mistakes for you. Why would this report be useful? You might ask, and the answer is because of this column right here, received not invoiced. If you have a scenario where you have an invoice not recorded as part of a match to a PO, you would see a dollar amount in this column. And this dollar amount will match your PO liability account, which is typically in your balance sheet. And this is a dollar amount of the total transactions. That would be the inventory value of these items that you've received but not yet invoiced. And this report would allow you to conduct a detailed audit on these items and identify the specific purchase orders for which this has happened. If you do see dollar amounts in here that are incorrect and need to be adjusted, you have no choice but to issue a credit memo for the accounts payable invoice that was posted incorrectly and then receive the PO properly with the correct invoice information through the regular purchasing module. There's no other option on how to fix this. If you do not fix this, it will result in open purchase orders that never close, and you would have quite a mess on your hands in terms of long-term viability of the Business Central system, not because of the system, but because of the lack of following the proper business process procedures when receiving PO invoices against the PO transactions originally. Again, in preparation for the actual year-end close, we also recommend using date-specific document numbers as part of your Business Central setup. Within the number series configuration in Business Central, you have the ability to assign a series of numbers that change based on date sensitivity. I've configured the sales orders in my Kronos company to demonstrate this issue. As you can see here, I have a sales order for a sample company that uses a year code to identify the sales order date in which the order was received. You can do this by year, you can do this by year with month, whatever sensitivity you like. However, the point is, if you are using date-sensitive number series that change from year to year, you need to make sure that you update those settings as part of your year-end closing procedures. Also, in preparation for the actual year-end closing and prior to doing the actual year-end closing, I would also recommend that you check your income balance sheet type accounts in your chart of accounts. Based on experience, we have seen new account additions that were done incorrectly, where users of the system accidentally selected the incorrect setting for the type of account that they're configuring. Obviously, we have our assets, liabilities, equities on the balance sheet and our income and expense accounts on the income statement. However, it has happened to many of our clients that they created new accounts, and because of their lack of accounting understanding or for various other reasons had selected the incorrect option here. And this is quite critical because if I accidentally set up an account that is incorrectly labeled, the system will treat these accounts in accordance with this specific setting during year-end closing. Again, I cannot stress the importance of this conversation. Meaning that if I select any account, and just because I use a 1, 2, or 3,000 range account number doesn't mean anything in Business Central. The numbering series does not drive any functionality in the system other than sorting on certain reports. So what's critical during year-end closing is that the system will look at each individual account, no matter where it's placed on the chart of accounts, and it will determine on how to treat the account based on this specific setting, income statement or balance sheet. Obviously, a balance sheet balance will roll forward into the future period. An income statement will be closed out to your retained earnings account. So quite important that you check this if you have made modifications to the chart of accounts. If you're the CFO of an organization, I recommend checking this because sometimes if the security of a system is not set up quite correctly, you might find that an account has been added to your chart of accounts without your knowledge. And although this seems like a basic problem that shouldn't happen, we have seen this happen many times and it's quite difficult to fix. So please make sure that you review your chart of accounts for this setting prior to actually closing the year in the system. Finally, after being patient and sitting through the entirety of this video, you get to the actual process of closing the income statement or year-end closing inside of Business Central. So this is the actual mechanism that closes out your income statement accounts and computes your net change, which will be posted to your retained earnings account, as any financial management solution does in the US. And there's a number of options here. We will not go through the entirety of all the options that you see here. However, again, we would recommend that you discuss this with your Microsoft Business Central partner who is qualified background and is certified by Microsoft to give you proper advice in this area. There's a number of options that you have that surround the posting process, as well as the ability to use dimensions as part of this process and what have you. There are some small other settings in the system that surround this particular process as well. Specifically, accounting periods would be something you want to take a look at as well. Also, what we get asked often is whether or not this is a process that actually closes the prior years. And unlike other systems, especially if you come from other Microsoft products like Great Plains software, what have you, there was a limit to how many years in the past you can still make adjustments. So one of the reasons many folks wait on doing this income closing process is because they might have a CPA that conducts a review or an audit. And as such a activity is usually pending and usually months out in the future, they wait to close the year. I would recommend that you go ahead and proceed and close the income statement in the current year as soon as you're done with your core accounting procedures that you execute on a regular basis. The lack of review or audit entries that are provided by CPAs in 6 months down the road or so should not stop you from closing the year. I say that because Business Central allows you to reclose the year several times, not just once. And you can simply go in and repeat this process as further activity for the prior years happen. Also, the software allows you to go back not just 1 year in the past year, like some other, like Great Plains, for example, was limiting you, I believe, to 2 years in the past, or 1 year in the past, actually. But this system allows you to go back to whatever period you would like, with whatever, of course, rollover changes that happen to retained earnings over that period of time as well. So you basically, if you have to go 3 years back, you have to, close 3 years ago, and then 2 years ago, and then last year, over again in order to adjust anything that else that might have happened in those periods of time. So having that knowledge should empower you to feel free to make these decision to close the year right away. It also has an impact on financial reporting as the ending balance from the last year, of course, rolls into the beginning balance from the current year on your balance sheet items, and you want that part of your financial reporting system in Business Central to work correctly. So in order for that to be achieved, you want to make sure that you close the income statement at your earliest possible time that core accounting functionalities have been concluded, and you in fact have closed the year from an operations perspective. And again, waiting for CPA entries should not cause you to hold off with this particular process. As you can see, again, these year-end closing procedures are complex and involve multiple steps. I encourage you that you take your time, review this video in great detail, and follow our guidelines to the best of your abilities. Thank you for sharing your time, and I hope we gave you some sense for the steps that are needed to properly reconcile and close the year in Business Central. If you're in a multi-company consolidation environment, of course, you would repeat these steps in each entity, and then, of course, in the consolidation company as well. Business Central has quite extensive intercompany as well as multi-company consolidation capabilities for those organizations that have multiple legal entities that they wish to separate, but for financial reporting purposes, consolidate them on a single set of financial statements. CBR Technology will, of course, be more than happy to assist you with the configuration setup of any of these sort of settings as well. Again, if you're currently with a Microsoft partner that does not have Business Central certifications, we highly recommend that you reach out to us. CBR Technology, we're located in California. However, we work with clients all over the United States, and we'll be happy to start a conversation with your team about taking care of your Business Central system in the future. Take care and have a good day.